This is probably the most important video I've made since the bear market began, because while many traders and investors are getting themselves completely wrecked, these times in the market can yield some of the best returns. In this video, we're going to look at how bear markets work and how to profit from them, because there are often similarities between them. No two bull markets or bear markets are the same, but there's often similar patterns that do show up that give us indications of when it's time to be buying and selling. Now, to display that, we're going to be looking at 2014, 2018, and also the present day and what we could be looking out for coming up next. And if you're a believer of the old buy and hope strategy, or should I say buy and hold strategy, this video might give you a little bit of insight of what else is possible in the market. I'm not a financial advisor, so everything I say is general information and for education and entertainment purposes only. Trading and investing is incredibly risky, so you must always do your own due diligence, seek your own professional help and guidance before making any decision in the market. And past results are not indicative of future performance. Every single successful trader and investor knows how to sell. Even Warren Buffett sells when he knows he's made a mistake. So with crypto, it should be no different. The difference with crypto is that it's a much younger market and it moves so much faster than any of the traditional markets. So being able to buy and sell that little bit more quickly gives all those people who've been around for a while an edge. Unfortunately for most crypto investors, and just even investors in general, whether looking at the stock market or property, they typically get active and involved in the market at exactly the wrong time, when hype, hope, enthusiasm is at its highest, and typically that's very close to the peak, if not the peak. And unfortunately for these investors, typically they are the very emotional bunch, especially the ones that aren't trying to get better at their craft. So while they're buying the tops, they're often selling the lows when the news is the worst and there's lots of doom and gloom. This particular cycle happens over and over again. Lots of hype and enthusiasm, then they sell the lows because they can't take it anymore. This cycle here is no different, but if you're watching this, then you've obviously stuck around. You haven't dumped your holdings on any of the previous dumps. If you go back and study some bear markets, what you will notice is that there's often a number of large swings up and down, putting in some pretty big gains by anyone's measure. Looking at 2014 from peak to trough, the market fell about 81%. But as you can see, before falling to that absolute trough of negative 81.3%, there's loads of pumps and dumps in between. 2018 was no different, with the peak to trough being negative 92%. But before getting to that negative 92%, there were a number of triple-digit gains from lows. Now, the common bear market pattern is that most investors or wannabe investors get worn out by these pumps and dumps. Now, crypto is a bit of an exception because it obviously puts in huge gains relative to every other asset, but other markets are comparable. If you're looking at something like the stock market, it might be gains of 10, 20, 30% and then dumps again. But due to these continuous pumps and dumps, they just get worn out and eventually they stop playing the game, and right around that point is when the new bull market begins. As you can also see in 2014, a similar situation of these dumps and pumps before everyone gets worn out, and then all these people that bought obviously around the peak have probably sold out and the market takes off again, and most people have lost interest and unable to make the best gains. Now, a key thing to be looking out for is on these pumps and dumps is when there is a macro high or low. It happens almost all of the time. You can see here that the market obviously put in a decent gain, dumped. All of these hopeful bulls out here were flushed out and lost interest on that final dump. But you can see that this low here is higher than the absolute low that was that negative 81%. The same thing happened in 2018. There was a couple of big hopeful pumps and dumps, but the COVID crash low was still higher than the actual cycle bear market low. Looking at the current bear market starting in November of last year, 2021, I'm fairly confident we're going to be seeing another pattern the same. We're going to be seeing a few more dumps and pumps, but eventually we're going to be getting a macro high low just about when things seem their most grim. It's going to be from that point there that when the market takes off, most people aren't going to be thinking about cryptocurrency, and that's going to be exactly the time that the markets will boom again. But as you can see, there's probably going to be a few more peaks and troughs in between, just like the other cycles before. Now, just like we spoke about earlier, professional traders and investors know how to sell, and crypto being a fast market, in my opinion, we need to know how to buy and sell quicker than the traditional guys. And just looking at a price chart and the percentage gains, that really gives all the information we need to know, because these gains are obviously huge relative to most other assets. So all of you buy and hopers out there, I want you to think about this. If you're able to capitalize at least 5 to 10% on each of these moves, accounting for losses in between, because there's going to be losses, being able to do so achieves some pretty big gains compared to any other asset. For example, looking at 2014, being able to capture 10% of each of these moves, accounting for gains. So obviously 100% move might be a few losses, but net after that 100% move, being able to capture at least 10% of it, if you're able to do that consistently over the whole course of the bear market, you can see there's a potential gain of 100%, while most people are getting crushed around 80% or more. 2018 is no different. Just capturing at least 10% after losses and expenses of each of these pumps and dumps would put in a gain of this whole bear market of over 130%. So I share that with you just as a little bit of food for thought, maybe a goal or something to go and research further, as it may fit in with what you're doing in the markets. Now, I know trading gets a bad rap because most people say if you just buy and hold, you're going to outperform any hedge fund or trader. But the thing with crypto is we just don't know which of these altcoins are actually going to be around to make new highs. The whole premise of it's better to buy and hold is based on something like a stock index, which doesn't fail, or at least hasn't failed yet. And just thinking about the potential percentage returns, crypto is significantly better, especially in the altcoins. But it's just a matter of knowing which altcoins are going to be around to be buying and holding. And at least in my opinion, we just don't know for sure which ones are going to survive the test of time. So with that said, while there are significant percentage moves that do happen in cryptocurrency, we need to be professionals and know how to sell, and obviously just kind of move on to the next one or take advantage of both sides of the market. Now, of course, that doesn't mean I'm right or what I'm talking about is right for you. Just something to consider and maybe a little bit of food for thought. While nobody knows the future or when the new bull market will begin, one thing is for sure, and that's the market gyrates around, putting swings up and down. And these downward bear market situations are often when we do see some pretty wild swings. So if you're looking for a few ideas and something to be working on, try capturing at least 10% of all macro swings, including for expenses and also losses as well. And if you end up doing more than 10%, then it's just a bonus. In the meantime, I'm going to be keeping an eye on the macro picture, these swings up and down, and looking out for that macro high bottom that could be the indication that the new bull market is about to begin. Different strategies are necessary for different market types, but now that we're in the bear market, I'm going to be looking out for those gyrations and the eventual high low on the macro chart. And then if we do see something like that, or when we do see something like that, we're going to be looking out for those new bull markets and then a different strategy once again. But at least for the current market conditions, at least in my opinion, getting out that little bit too soon is often better than trying to hold on for bigger gains. That's a wrap from me today. I hope I've given you some ideas to go away and work on your bear market strategies. If you did enjoy this video, as always, you know what to do. And until next time, I'll catch you then.